Program 5 considered some reasons for using credit and borrowing. If you have a secure job but lack the cash for a good car or stereo, you may decide you can afford to borrow the money. And of course, most of us borrow to pay for large, long-lasting assets, like a house. And sometimes emergencies arise which make it necessary to borrow for medical bills or an emergency trip. What do you think would be a good reason for using a charge account or bank card for short-term credit or borrowing? Yes. You don't have to carry cash, and you can pay the whole month's bill with a single check. Borrowing for a house may be considered in part borrowing for an investment. You may also borrow for other investments, but you should know something special about the investment or use it in a business. You of course pay interest for the privilege of borrowing, but there are two financial benefits for a borrower. Can you think of what they might be? Right. You can deduct the interest you pay if you itemize expenses on your income tax return. This, in effect, pays for part of your interest cost. A borrower also benefits from inflation, since the repayment is made later with cheaper dollars. But lenders can offset this inflation benefit to borrowers. How can they do this? Yes. Many institutions that make loans get the money from their customers' savings. The interest paid on loans allows those institutions to pay interest to the savers. And merchants of personal and household goods can often make more sales when they offer credit and arrange loans. Which products do you think are more commonly sold on installment credit? Yes. The use of credit, including consumer installment buying, has become so widespread in the past 50 years that it's an important part of our society and economy. It helps growth. Borrowing by business and government is also important. But debt and credit have their risks too. For our economy, borrowing tends to increase inflation. For consumers, what is probably the biggest risk? Right. And the finance charge raises the cost of consumer goods and services, inflating personal expenses by that amount. You, both as a consumer and as a member of society, must continually evaluate the benefits and the risks of borrowing. A charge account provides open account credit, and in many cases is more for convenience than borrowing. Businesses regularly use open accounts with suppliers. Consumers have had such accounts for a long time, but today they are mostly in the form of charge cards. Should you set up credit accounts and cards? There is little doubt that you and everyone else pay the cost of credit. But if you're like most middle-income ordinary people, will you at some time establish your credit? Yes. If you are employed, have a telephone, subscribe to a magazine, or belong to a club, you are on someone's potential credit list. Or you can drop by Sears, Ward's, Penny's, or your local department store and apply for a charge card. Unless you're a recluse, you'll probably need some sort of credit arrangement. If you want to rent a car at an airport, which is handier, a credit card or just money? Right. Of course, when you get credit, you'll have to answer several personal questions. Not about your beliefs on religion, sex, or philosophy, but where you've lived and worked, your family status, and present charge accounts. Some dissenters believe that it's demeaning and invades your privacy to go through the procedures necessary to establish a good credit rating. But since almost everyone needs credit at some time, establishing a good credit rating is wise. If you pay your bills on open accounts promptly each month, you will establish and maintain a good credit record. And if you pay the balance each month, you usually avoid paying interest charges. How much would you think these are? Yes. In most stores, you don't have to pay the entire balance, but a minimum payment is usually specified. The statement lists the previous unpaid balance, the new charges, and the total amount owed. In addition to local regular monthly charge accounts, then, the revolving or budget account, such as the major national retailers use, allows continual purchases up to a limit of the line of credit. What is another common credit account? Yes. The Visa, MasterCard, and other bank cards are issued by a bank and are widely accepted for convenient use. Except for a small yearly charge, you don't pay interest if you pay the balance each month. You may just pay the minimum charge, but then you are charged interest on the unpaid amount. The last kind of card is the T&E, Travel and Entertainment, used mostly by business and professional persons. It's really not a card for delayed payment, for most charges must be paid when a statement is received. Can you think of any such national credit cards? Right. If you subscribe to Fortune or the Wall Street Journal, have an account at Brooks Brothers or the local equivalent, or travel by airline, you'll probably get an invitation to have a T&E, maybe even a gold card, not just the green one. What are 3 kinds of credit cards? Right. In simpler times, you establish credit in a community by years of personal encounters. Today, your credit standing is determined from a record of your financial transactions, which can be sent anywhere by wire and computer in minutes. It may sound arbitrary, but credit managers have found that you are a better credit risk if you've been working for the same company longer, have lived at the same address longer, have a phone, have a car about 3 years old, and have had good charge account records. A prospective employer looks over your resume, and an insurance company wants data. Do you think credit managers need information before they recommend credit? Yes. In order to be as fair and objective as possible, credit managers have worked out many methods based on the limited data available to them. Even then, they often use a certain amount of professional judgment in making their decisions. Credit is such a valuable, sometimes even critical matter that you must take care of it. Since 1975, there have been several laws passed affecting credit. The Equal Credit Opportunity Act, the Fair Credit Reporting Act, the Fair Credit Billing Act, and others. Credit may no longer be denied because of sex, age, race, religion, or welfare status. Both husband and wife may now gain a credit history. Which is one of the laws affecting credit? Yes. Credit reporting must now be accurate, relevant, and recent, and available only to bona fide persons. If a credit bureau gives you a poor rating, you can find out why. Creditors must mail bills 2 weeks before they're due, and creditors may not send unfavorable reports to the credit bureau for 90 days if there is a dispute. Which act requires this? Yes. The Fair Credit Billing Act also allows you to withhold the payment for defective goods purchased with a bank card if you have tried unsuccessfully to resolve the problem with the merchant. This applies only to purchases within 100 miles. The original Consumer Credit Protection Act, described in the previous program as the Truth in Lending Act, applies to all credit accounts as well as note borrowings. You must be informed of the annual percentage rate of interest charges. The same act requires that the credit card contain identification, usually your signature, prohibits companies from sending you unrequested cards, and limits your liability to $50 for a lost card if you notify the issuer of its loss. What's the missing word of this act? Right. A card or credit account charges interest, or a finance charge. It can be based on previous balance, average daily balance, or the end balance. Or it can be charged only for over 30-day balances, in which case you get, in effect, up to 29 days of free credit. What is another benefit of such an account? Yes. The development of a massive, complex computer network allows us to limit the amount of cash we carry by using plastic money. But if we're not careful, there may be serious problems with it. Spending too much is only one of them. Another problem is the actual cost of the finance charges. A 2% per month charge, if compounded, means 100% interest in less than 3 years. What is a popular term for credit cards? Yes, cards and T&E cards can even be used to get cash itself at some hotels, banks, and elsewhere. You can even make purchases by telephone and charge them. So credit cards, especially the widely used bank credit cards, are easy to use. Perhaps this is the principal problem. What is the solution to it? Yes. In the future, you'll carry less money and use even more sophisticated cards. Electronic funds transfer, EFT, and point-of-sale computer registers will nearly eliminate the use of cash. You should be ready for its eventual coming with well-established credit.